This podcast is not operated by an organization, but is an independent solo project run by me. It costs me considerable time and money to make Copytraders Club, and you can ease that pain by making a small $3 per month contribution at patreon.com/copytradersclub. I've kept the price deliberately low to make it an easier yes, even if you have not previously supported anything in this way. Maybe this time it's different. It only takes 2 minutes to sign up and become an official supporter of Copytraders Club. Patreon.com/copytradersclub. Thanks for listening, and thanks for your support. Copytraders Club, where you can learn how to make better decisions and more money copy trading. I'm Gavin McCauley, my name and username on eToro. On today's episode, we talk to an American PI, who is pulling out all the stops. Here we go. Season 2, Episode 11 of the Copytraders Club podcast, and as always, my aim as an eToro enthusiast and copy trader is to demystify this new and uncharted world of copy trading, understand what are the pitfalls and best practices, and how ultimately to succeed as a copy trader. In chats like today's, the aim is to answer all your questions about this popular investor, and reveal more about them than anywhere else, so you can assess whether they might suit you. In this episode, we talk to Tom Holland, one of the leading American popular investors on eToro. No expense has been spared, flying him all the way from New Jersey to be with us here at the legendary Copytraders Clubhouse. And he approaches. Tom, hello. Welcome to Copytraders Club.
Excited to be here. Thanks for having me, Gavin.
Well, we're excited to have you. I know you've listened to a couple of episodes, possibly only in preparation for your appearance, but you know enough to know that in order to get past security, you must answer a series of quickfire questions. Are you ready for those?
Whatever it takes to become a VIP.
Username on eToro.
tholland3510.
Date you joined eToro.
August 2020.
Date you became a popular investor.
February 9th, 2021.
Year of birth.
1997.
Place of residence.
New Jersey.
Profession.
Solution architect.
Briefly state what you aim to achieve on eToro.
It was a combination of I figured I'd spent all of these months doing all this research and design and testing. I was like, why not share it? And then I also wanted to, as I'd been a copier before, I wanted to provide what I was sort of looking for, since I thought other people might also be looking for what I was.
Name one of your investing heroes.
Peter Lynch.
Name one of your favorite investing books.
I like his book, One Up on Wall Street, but I also tend to lean towards less so financial books, but more so even just thought process books, like the Book of Why, Super Forecasting, and like several others that I like, because I think it helps make better decisions overall.
That completes the formalities. Let's proceed now into the VIP section here at the Clubhouse, the splendid Copy Traders Lounge. Tom Holland, aka tholland3510. Are you ready for this magical transition?
After those intense questions, I'm ready for anything.
Okay, Tom, so here we are now in the VIP lounge at the Copy Traders Clubhouse. Is it an exciting moment for you to drink in these surroundings?
I've dreamed of it since becoming a PI.
Very good. All right, so I've been researching you a lot over the past few days. I've been Googling away. So Tom Holland, it appears you're a BAFTA award-winning British actor. Tell us, what did you draw upon from your own life to make the arachnid-influenced superhero a relatable character?
Unfortunately, you have the wrong Tom Holland. I'm not the one with the acting talent. Hopefully, I have some investing talent, but that is to be seen.
Okay, well, it just so happens I had your eToro profile to help with the research, so all is not lost. You're from New Jersey.
Yeah, born and raised.
Now, you're only our second ever American PI, representative of eToro USA. Copytraders Club has an international listener base, so perhaps we should learn a little something about this little remote country that you come from, called USA, and indeed about the state of New Jersey. So, shall I run through a few points on New Jersey?
Sure.
Named after the British Channel island of Jersey, stretches from the eastern end, i.e. the Hudson, across the river from New York City, places people may have heard of like Newark and Hoboken. Is that how you pronounce that? Hoboken?
Yeah, Hoboken.
And the Atlantic Ocean, i.e. Atlantic City. To the west, bordered by the Delaware River and Pennsylvania. Where in the state are you?
Originally, I was born over in Richfield, New Jersey, which is just about 1 or 2 towns away from New York. Currently, I'm living down more towards central Jersey, sort of between central and northern Jersey, although that's debatable. There's some fierce debate amongst New Jersey citizens on whether central Jersey exists or not. For this conversation, I'll assume it does.
Okay, so the capital city is Trenton, pronounced Trenton.
Yep.
Now, what little I know of New Jersey is informed by the role the state played in the golden era of hip-hop. Know what I'm saying? Overshadowed, as in so many things, by New York, of course, but represented by acts like Naughty by Nature, Queen Latifah, and Ice-T. TV shows set in New Jersey, The Sopranos, Boardwalk Empire, Jersey Shore, and House. So what can you teach us about New Jersey? In particular, in what ways do people from New Jersey feel that outsiders misunderstand New Jersey?
I'd say it's a lot more boring than it is depicted on television. I'm actually watching or rewatching House recently, so funny you mention it. A lot of, I think, influences come out of here just because there's a lot of people crammed into a very small area. New Jersey is very populated for its size, so it's a nice area. I mean, there's a lot of range in terms of like there's some rural areas and then urban, suburban, since depending on where people are living within the state.
Yeah, on Google Maps, I was surprised at the number of forests and things, especially around the outer edge. The idea we have of New Jersey, I think in popular culture, is very urban, like part of New York's urban sprawl. But there's more to it than that.
Yeah, if you're towards the northern part, there's a bit more of that. There's also some other subsections, like Trenton might be a bit more like that. But for the most part, it's more suburbs and then rural area. For example, when I was I was a Boy Scout when I was growing up, and we would go camping frequently, like once a month or so often. And we'd go to places like there's a Lakota Wolf Preserve where you can go and see wolves. There's tons of other camping locations. And then it's actually interesting. A couple hours away, if you drive over, you can go over to Pennsylvania as well. So there's a lot of different options as well. And I guess variants. But it's interesting because when you're actually living there, even then, you can get the fullest impression that it's all either one or the other in terms of like urban, suburban, or rural. Sometimes people don't travel as much. So if you just stay within one sort of area of a couple of towns, you may not get that impression, depending on how much you travel, of how varied New Jersey actually is.
Who's ever heard of Americans who don't travel much?
You'd be surprised.
I wouldn't. So tholland3510, I pronounce that in the American way. What's with the 3510?
That's just my favorite numbers, 3, 5, and 10 I like. No real deeper meaning behind them.
So you are a solutions architect. First of all, what is that? And secondly, how does that inform your approach to eToro?
So the explanation's a bit boring in terms of I design solutions for an architecture, which is sort of, I guess, to try to unpack it a bit more. I would look at the architecture of my company's systems, what's going on, and what tools can we bring in and leverage to better solve issues we're facing. How would they fit into our current architecture? For example, do we need a different database? Do we need another tool to interact with the database? How can we leverage the tools we already have? So a lot of it's just designing the approach that you're going to use to solve problems, which I think folds in very well to what I'm doing on eToro, since I'm trying to solve a problem in terms of how can I best invest with these given different variables, scenarios, things happening, the environment, financially, politically, everything that's happening.
Okay, so you have to adopt this sort of overarching view of the ecosystem and then present solutions to all the various problems and log jams and inefficiencies within it, something like that. You see, I picture you seeing eToro for the first time and realizing that it could represent an opportunity for you. So then you went about coming up with your master plan for success. You would learn everything you could about eToro, what works and what doesn't. You'd learn from those who've been involved for years, develop your investing strategy, have a clear idea of how to communicate, and you would dot every I and cross every T, giving yourself the best chance of ultimate success. How accurate is that characterization?
It's a bit more accurate than I'd like to give it credit for. Although I would say
Give
the start
credit, that's
was slightly
fine.
different. No, yeah, I'll give credit. At the start, so at first I was just doing whatever trading I thought would work. And then we had a slight pull down in the market with crypto. And I was like, oh God, I don't know enough. What am I doing? So while I was doing research, I was like, okay, what can I do to still be making money? Should I just leave it in and hope it works out? Because clearly I'm not informed enough to be making the decisions. I need to do more research. Then I was actually reading a book called Simple Rules. And funnily enough, eToro's CEO was interviewed in the book. And he mentioned his platform, although it was a different name. I think it might have been Open Book or something like that. And I was like, oh, let me go check this out. I went online. I saw that there was copy trading available, and I actually copy traded some of the available PIs. And then from there, I worked on developing my own approach. I tested it, tried to fix whatever I could figure out in terms of any issues I could find. And then from there, I became a PI. And a lot of it at that point was learning, trying to find stuff. My bio was largely based off Jay Nemesis's bio, which at first I had credit for it, but as it's diverged away, I removed the little thing in my bio based off of Jay Nemesis. So it was definitely fun. A lot to learn. A lot of people have put out great content in terms of how being a popular investor should be done, such as yourself, Felix Felix as well.
Well, I was just about to say, next point is how I came across you. And I think I first saw you when I was looking at US popular investors, but then I realized you were popping up in the comments of Felix Felix videos. And then it became clear to me that you're a very involved PI, more immersed in the eToro ecosphere, I suspect, than any other US PI. Would that be fair to say?
Probably. I don't know. It's tough because the US is sort of still developing as a popular investor sort of sphere. There is some variety, but there's a good chunk of popular investors that are just inactive, and they were made popular investors and they just have existed, and they may post once every like 6 months or so often. Then you have the group that's more, more often posting, where they may post once every month or 2 months. And then you have really frequent posters, which are, let's say, once a week, depending on the market. And then you have me, which I've been told I post too much, so I've toned it back a little. With all the different things that I have coming out, it can get I can flood the news feed a bit.
So another thing I saw when researching you, but you've already mentioned, in fact, in this chat, is that you are a scout master. Or maybe earlier you mentioned you used to be a scout, but you're currently a scout master.
I just stopped recently. The troop disbanded. All the kids had aged out, but I was until about like 3 or 4 months ago.
And what qualities do you think that might indicate to potential copiers?
Well, a lot of what the Scout program tries to prepare you for, since I went through it from Cub Scouts up to I became an Eagle Scout, which is the highest ranked Scout, and then still was involved as a assistant Scoutmaster. A lot of what it tries to instill is leadership, going off and being able to sort of do your own thing, lead your own projects. Like the Eagle project is basically one giant project for you to go and gain experience in sort of how the real world works in terms of leading a project. You have to find someone who needs a project done. In my case, it was a group, the Audubon Society, which was preserving certain areas and taking care of them. And then you have to figure out what they want you to do. You have to come up with a project proposal. You have to present it to the person who's sponsoring it, which is the person who needs the project, as well as to the Boy Scouts of America, so they can review it as well. Then you have to go organize it, get the materials, potentially do fundraising, depending on if you get donations. You then have to get people, bring them in to work with you and to help you build whatever you're trying to do or accomplish, since sometimes they're more services than products. In my case, I built a large butterfly garden for their trail, and then I restored the hiking trail. But in other cases, sometimes people will do food drives or other sort of events. You then have to actually accomplish it, present your findings in a nice report, get the sign off from everyone. So it's sort of like you're actually doing what you have to do in the real world, where you have to come up with an idea, find someone who wants it, and then go and create it.
Okay, so it's all a very consistent message so far. Project-based, problem solver, real-world solution provider, and even, a Boy Scout, and everybody knows a Boy Scout's image is squeaky clean. So let's totally blow that out of the water when we hear your answer to the question, what would somebody who knows you well say is the most annoying thing about you?
Depends on if you want to go with personal life or more in general. Because in sort of, I guess, worst trait I would go off of is I tend to keep throwing things on until I'm so stretched thin, I'm barely sort of knocking everything out. Recently, I've sort of had to sideline the YouTube a bit just because as you add more and more things on, it gets really hard to actually accomplish what I've set for myself to do. In terms of personal life, I'd say it's more sometimes I get excited about something and I'll go on and on about it for an amount of time I'm not going to specify, and that can get frustrating. I've learned to tone that down over time, but definitely when I was younger, that was a bit challenging. Can get a little annoying if for hours you're talking about some very niche random topic, such as crypto for most people currently.
Well, I was hoping for something much more revelatory that shows your dark side, but the clean image is intact.
Unfortunately, I'm pretty boring. There's no Batman background story or Spiderman origin story.
Okay, well, let's maybe try and reveal something else when I ask you to pick a number of between 1 and 10, so I can ask you a question from the art of people.
Sounds good. I'll take 3.
What is your favorite charity organization to support and why?
I believe Boy Scouts is a nonprofit, so I would probably go with them. But I've also, when I was adopting my dog, that group, I did a donation too, so that was pretty cool. They drive up dogs and cats. They've got I don't know if you'd call it like sister organizations. I've heard that before with other companies where they have one group that does cats and one group that does dogs. They bring them up from Alabama since there are very loose dog and cat control laws around there. So they have a big problem with a lot of animals just wandering around and getting injured. So I've been less involved with the dog, I guess, adoption service, but they were fun to work with. Very fun getting a dog.
And you gave a sweet home to your Alabama dog.
Yes. She's a little crazy, but she's definitely having a lot of fun. She's in the other room eating a bone right now.
Okay, Tom, let's get down to business. If I could ask you to open your profile on eToro and read for us from your bio, perhaps the 2 paragraphs, investing strategy and goals.
Sure. So I use the halving cycle, risk levels with adjusted percentage distributions, and several other indicators to make my decisions. I also keep some funds in cash so that when corrections occur, we can accumulate more cryptocurrency. My goals are to make and protect profits made during this bull run, maintain open and transparent communication, and to keep pace with Bitcoin's price increases while keeping some percent of our funds outside of the market.
Okay, great. Now we're going to explore your strategy in depth in a few minutes, but that sets the scene. You're very much a sort of details-heavy PI. Also in your bio, you include a link to an 11-page strategy document. In fact, it's called a 12-page document in your pin post, so I'm not sure.
It's changed a couple times. Sometimes I make edits.
So as we discussed, your approach as a solutions architect means you're not a kind of broad brush guy. I was wondering, when it comes to eToro, what are the potential pros and cons of that? Like the pros, for example, no one can be in any doubt that you're putting in the work, and anyone who wants a crypto guy working hard on their behalf, you might fit the bill. But the cons are that a lot of people are lazy and just want to know the basics. There may be a danger of blinding them with science, with too much data, making your message potentially less accessible. What do you think about that?
It's definitely tough because even when someone copies me, I resend a link to that full document. I have an FAQ, which is a number of pages as well, with questions I get, and a lot of other information. I sort of look at it as if they don't want to read the information, then I've done everything I can. I try to give summarized versions. For example, the welcome message I try to summarize everything as much as I can, but it's hard within a character limit to accomplish that. I try to do the same thing with my pinned posts, but at the end of the day, it's sort of the same thing with anyone else's. If a copier is copying anyone else, it's as much research as they're willing to put in. So I figure for those that want to be more informed, I'm giving as much as I possibly can for them to read. They can go and become as informed as they want to. For someone else that's just picking 5 people saying, hey, they're in the top 5, they're probably decent. I'll look at this like index funds. I'm just going to throw my money in. It's there if they want it, but if they don't want it, it's not going to change anything, me having it or not having it.
Yeah, better to have it and not need it than need it and not have it from the copier's point of view.
Yep. There are challenges related to it. It does make it harder to be flexible, but I sort of look at it as if I need to be flexible, then that's something that I should think about, consider, adjust, put into the strategy anyway. So I try to not look at that as too much of a downside, because if I need flexibility, for example, the most recent edit to my strategy, I believe, was from the last version. I added some wiggle room in terms of I may have 5% or so that I adjust based on market conditions, just based on what I'm reading and my research, less so based on the indicators in the chart, because it's hard to, sometimes I want to make a certain action and I can't, which can be a good thing or a bad thing because it keeps me consistent, but it can also lead to missing out on opportunities that I think are available.
Okay, you mentioned indicators. You even detail all the indicators which you use, which is quite a dizzying array. Now, mercifully for the listener, I won't list them all, but we just don't have time. But here are a few of the more interestingly named ones. Pi cycle top indicator, cumulative value days destroyed, realized HODL ratio, MVRV Z-score, and difficulty ribbon compression. So you've blinded me with science there. Let's talk about some of the issues with being a crypto-only PI in the US. Are you a crypto-only guy, or would you include other assets if they became available?
So because we were in a bull run around when I was starting, and because eToro didn't offer any others, I haven't really done a ton of research on stocks, so I need to do more research first, but I'm definitely a fan of diversifying across different assets. Eventually, I'd like to have a property via house as part of my net worth, crypto, stocks, so more well-diversified versus pretty much all in on crypto, which is sort of where I'm at now. Not necessarily a great thing. Sometimes it's very stressful seeing your net worth decrease by 10 or 20% in a day, but it's a short-term pain, hopefully. There are definitely challenges around that because I can't currently do it on eToro, and I'm not sure if I would be able to in the future. For now, eToro has added it so that regular investors on eToro in the US can buy stocks, but popular investors cannot. As far as I'm aware, if a popular investor wanted to do that in the future, they would have to, due to the US being so regulation heavy in finance, which is both good and bad, definitely strengths and weaknesses there. I would have to complete the SIE exam, the Series 63 and the Series 7. The Series 63 and the SIE I could do without sponsorship, but for the Series 7, I or anyone else would need to get sponsored by a financial company, which as eToro sort of takes on more of this partner approach, sort of like YouTube's partner program with popular investors, they're not going to be willing to sponsor that. So I would have to, in order to get that, quit my job, apply to a financial institution, get them to sponsor me, work for them, get the license, and then either stay there or move on, which I don't really want to do. I don't think it's super honest to any sides of the party. And I like my job comparatively. I don't really want to jump into a finance company just for that. So it presents a tough sort of situation. There's also the financial investment because the studying materials as well as just the time and the tests themselves cost several thousands of dollars if you want to be well prepared for them. It's a tough situation because I don't want to go and do the 63 or the SIE and then not be able to ever do the Series 7 and then spend several $1,000s, but it's also good to prepare. So it's definitely a tough situation. I'm going to have to say I would like to invest in stocks. There are also other issues, such as some financial investors. Like if you work at a financial company, you can't copy a popular investor who does stocks, at least in the US. So if I added that to my portfolio, I would lose people that are specifically in that niche, which would be tough for them. But there's definitely a lot to that question. I would like to buy stocks as well, would be the short answer. But there's so many different factors with regulation and everything else that I don't know if it'll be possible or when it would be possible.
Yeah, that's a bit of a quandary then for eToro in terms of their growth plans.
It's a challenge, yeah.
You don't think they could sponsor their PIs to complete all of those? Is eToro not viewed as a financial institution in that regard?
So I don't know all of the details. I only know that I assume they're eventually going to. When I asked about sponsorship for the Series 7 several months ago when they added stocks for normal users, at least then the answer was no. It could change in the future. I don't know. I'd have to check with eToro again and see what their official stance was on it. But just as a quick question, are you guys currently sponsoring? The answer was no at that time.
Right.
And that one, you need sponsorship. There aren't really, the only loophole I found or heard about is either A, if someone joins a financial institution, gets it and quits, which is sort of not great. And the other one is if someone can go find a trading firm and have them sponsor the person, just short term if the person agrees to it, but they have no real reason to do that because then they have to pay for the tests. Technically, they could have you pay for the tests, but it's not really. I've only heard of one person doing that, and that was like 40 years ago. So I severely doubt it's still available. And if it is, I wouldn't really want to go that route.
Let's get back to your profile now and have a look at your results. So your first monthly result was in August 2020. And so for that 5-month period, 51%, and then 2021, 129%. And as of the recording date, 2022, minus 14%. So you said you started copying initially?
Yeah, so for the first approximately year, it actually ended up pretty cleanly based on the timing. From August to the end of December, or about mid-December, I was copying people. Mid-December to January, I was doing some testing with my own funds for my strategy and some ideas I had. And then for all of 2021 and 2022, it's just been me being a popular investor because I became a popular investor in 2021.
And your risk score, both average and max risk, pretty steady for most of the last 12 months at 6. Just remind us, what are the risk score parameters in the US in terms of getting copy blocked?
I think they moved it to 8 because everyone kept getting copy blocked. I was one of the few people that didn't, in part due to the fact that I keep assets to the side, and I also distribute it across several.
Copier numbers and AUM. Let me describe to the listener the story of your copier graph. There's a low plateau followed by quite a steep, steady rise. And then you've sort of maintained copier numbers very well. You're not really declining.
Yeah, it ended up following the market increase pretty well. And then from there, I've went sideways with some slight ups and downs. Nothing too major, maybe within a couple hundred copiers up or down as the market looked like it was starting off. And then people got nervous and it's repeated. Yeah, which I think is in part because I've looked at other popular investors' charts as well. I think a lot of the reason it's so consistent and then it goes sideways is just because I'm pretty consistent in the message I put out and all the information. So if someone chooses to copy me when it's spiking up, I was pretty clear with what I thought was going to happen, what I do. They could see exactly what I'm going to do. They could see what happens with crypto's price and then see how I react and see that I did what I said I would. So I don't think any of them, the majority, at least from what I could tell, didn't uncopy at that point just because I was doing what I said I would, and they could predict it. They could also predict what I do in the future, so I don't think anyone was really surprised. And I like to think I make a pretty good argument for why cryptocurrency as a whole will likely increase in the future, which I think helps make people more comfortable staying in for the long term because they know I'm also in for the long term.
Speaking of long term, let's have a look at trades per week and average holding time. Trades per week, 4.26. Average holding time, 5 months. I think that tells a story that you're a relatively long-term crypto guy, but you're not just a buy and hold. And we'll get into your investing approach in the next little bit. Now, for now, let's talk about communication. Something you don't seem to struggle too much with. You've got a link tree that you link to, which has a whole bunch of places where people can catch up on the latest Tom Holland action. Substack, Twitter, YouTube, your Riding the Wave emails, to which I'm subscribed, and I get a lot of them. Let's talk about your YouTube videos first of all. One question I was going to ask you is, do you use a green screen? Because I can see in your videos, you're not in like a little circle, like you often see other popular investors. You're floating about, you and your gaming chair. It's a really good effect. But I can see, even though we're sitting together in the Copytraders Clubhouse, it's not like I'm looking at you at home or something, but I'm aware that there's a green screen in use in your office.
Yes, I got one off of Amazon. It was a pretty small investment. As can be expected with it being a small investment, it's also a little challenging to use. I wish it was a little wider. It can be tough to get it exactly matching up with where my camera is in terms of the right sizing. So hopefully in the future I can upgrade. It's also a little challenging to set up just because it folds up, which the way it folds up is very interesting. It's a very weird process, but it ends up turning into a small circle from a very large oval.
With the twisting of both wrists sort of action?
It's sort of, you twist and turn it and then you press it together. Yeah. It's definitely not what I expected. It took me a couple of tries to get used to it, but now I finally got it down. But eventually I'd like to upgrade to a real green screen that's much easier to work with because this is a pain to set up and take down. I'm in an apartment, so I need the space.
You also say you're going to ease back a bit on YouTube. Tell us what you mean by that.
Yeah, so recently I've pulled back a bit just because, as we discussed earlier, one of the challenges I face is just in terms of overloading myself sometimes. And sometimes with that, I have to rebalance things and make sure that I'm still accomplishing the things I've committed to accomplishing. So with that, when I added the Substack newsletter and all that information, that combined with eToro, combined with my day job, combined with YouTube, something had to give a bit. And YouTube was taking the most time and giving the least results in terms of just content for people to be able to go through. So for now, I've decreased the amount, phasing it down a bit. I'm still hoping to put out some videos, but just in terms of the time to the results, if I spend 5 hours on YouTube, maybe I get 1 or 2 videos. Whereas if I spend 5 hours writing on eToro or a newsletter, I get a couple articles or a couple posts, which is much more useful to copiers, I think, and people that are following the newsletter.
And so now your videos on YouTube are mostly eToro status update videos every couple of weeks, something like that?
Yeah, I was doing a status update video every week. I've been skipping a couple weeks just because partially the time, but also partially because I felt like they might have been too frequent. I think some people were enjoying them, and I was happy to see that, but the market hasn't been doing a lot recently, so I felt like it was getting repetitive. I was saying similar things each week. The indicators most of the indicators I look at are long term. So most of them were saying the same thing. So I figured, okay, I'll step back a little bit and I'll try to do them less frequently, maybe when there's actually more changes happening, just because it made more sense in terms of from my side as well as I thought from the viewer's side, because they don't want to see the same thing every week.
There's one video you put out 4 months ago. It's possibly your most viewed. A half-hour video of your crypto investment strategy. How often do you refer people to that? Say, look, you want to copy me? Check out this video. That tells you everything you might ever want to know, and possibly more.
So that sort of leads us back to the I spam people with information sort of route. I include in the welcome post a link to that video. I may include it in my pinned post. I'd have to double check. But if you actually try to look for anything, I do my best to make it so that you can find everything very easily, because I don't want someone to have to go and search. The 11-page document's easy to see. I think I might have even added the link to that video in the 11-page document or 12-page document, whatever it's changed to recently. And so I try to make it easy to find all of this stuff and in different content formats, just because if someone prefers video to text, then I want to make it easier for them to be able to consume it and decide whether they want to invest under me.
Well, I suppose a frequently asked question you get is, why would I copy someone who's buying crypto? Why don't I just buy it myself? And the answer is that video and your accompanying document, and I guess your approach in general, is answering that question in the fullest possible way, right?
Yeah, that's my goal. It's tough because crypto is such a fast-moving space. If you don't pay attention to it for sometimes a week, sometimes a month, which doesn't seem like that long a time, major changes can happen. Something you can see drops within crypto sometimes within a day of 20, 30% or more. And then the next day it could be back up or it could have stayed there. So it's definitely something that takes a lot of time to track. And that's where I definitely think the Popular Investor Program really shines through, because I'm spending a lot of my time just researching it, keeping up to date, and making any changes I think are necessary. So if you want to go and do that on your own, I even say, since people outside the US can't copy my strategy, I look at that 11-page document as a guide to if someone outside the US wanted to copy my approach. And I actually post whenever I make any trades. So if I buy or sell, I post, I say, I just made an adjustment. Here's the things I sold. Here's the things I buy. If someone outside the US wanted to go and implement my strategy, they could go look at the percentages within the document, look at my update, and actually implement it themselves. It'd just be a lot more work. I've had some people ask me about that before, and I explained they could definitely do it. I make it a lot easier because I post updates, but it would still take several hours worth of work. So I look at what I'm doing is I'm presenting my viewpoint, my research, my approach. And then if you choose to copy me, you're saving yourself a lot of time and getting the same results as if you just did it yourself.
Do you copy?
Do you copy?
Do you copy?
Do you copy?
Copytraders Club.
Copytraders Club.
Do you copy?
Do you copy?
Do you copy?
Do you copy?
Copytraders Club.
Copytraders Club.
Okay, let's delve a little bit deeper, or look under the hood, as I said on a recent podcast, being very American. Your portfolio positions. Normally I start this bit by describing the different asset classes in terms of stocks and ETFs, commodities, crypto. And then I thought we weren't going to be able to discuss asset classes as I normally do because you're all crypto. But in fact, you say that your strategy is based around what you view as three asset classes: Bitcoin, altcoins, and cash. Explain, please.
Sure. So Bitcoin tends to be the market mover. So if it's going up, other things will be going up within the crypto space. If it's going down, everything tends to be panicking. If it's going sideways, sometimes you get a bit of movement up and down in terms of altcoins. Altcoins are typically anything other than Bitcoin. Sometimes people not count Ethereum as it just because it's so large, but typically it's anything other than Bitcoin if you're referring to it as that way. So what I would like to do is Bitcoin's more stable. So I want to have funds in. I think it's going to be here no matter what. Some people are concerned. I think Anders and some other popular investors may be concerned about an eventual extinction event of different cryptocurrencies. I'm not as convinced at the moment that that'll eventually happen, but if it did, Bitcoin would be the one that survives. I think that there eventually will be, in terms of a lot of useless ones might be wiped out, but I think a lot more will survive than people think, because altcoins, one of the interesting things about altcoins is that they sort of function like mini businesses. And as time goes on, they're becoming more and more varied, and they're using the cryptocurrency framework sort of as a base to build, but they're actually building services on top of it that are much more like businesses. And you're sort of seeing a lot of development within that space. And we can go into this later if you want, but it's a bit off topic. Within the NFT space, they're getting incorporated, stuff like that, like the Bored Ape Club thing, that group, they're doing that and going the legal route. So it's interesting to see the evolution we're seeing in terms of the crypto space. But for my strategies purposes, you can look at altcoins as much higher returns, but much higher risk. Bitcoin is very high returns relative to other assets, but also high risk relative to crypto, lower risk though. And you can look at cash as we're guaranteed to lose money thanks to inflation, but it's stable. So my goal is when risk goes up, and I think we're much more likely to see a crash, that's also when altcoins tend to go up the most. So as that goes, I try to increase my ratio of altcoins, but I also try to decrease risk by moving funds out of crypto in general and into cash. And then when we're at the bottom of a bull run, we're in a bear market, and I think we bombed out. My goal is to have as much Bitcoin as possible because it's not likely to disappear, whereas the altcoins are at a higher risk of disappearing. But I don't want to hold much cash because it's very unlikely that we go lower. So that's sort of the gist of my goal, where I'm trying to move it between the asset classes and balance the strengths and weaknesses of all of them. Because altcoin might disappear tomorrow, or it might go 5 times up. Bitcoin isn't likely to disappear. It still might go down 80%, but it also is probably going to go up in the long term a stable amount, maybe 2 times its price or 3 times, which is great, a lot of money. Whereas cash is stable, but it's going to trend downwards. So we're just balancing those factors.
If I look at your portfolio now, let's have a look at your positions. You've got 10 positions. I'm going to read the approximate position sizes as per the invested column. Bitcoin, 41%. Cardano, 32%. So those are the 2 big boys for you.
Yep.
The rest are 4.2% and below in descending order. Ethereum, what I used to say is Miota, but you pronounce it Myota.
Yep.
Maybe that's the American pronunciation.
It might be. It stands for Internet of Things or something along those lines. It's based on the Internet of Things. That's my guess. And then sometimes it's also called IOTA.
Link, Comp, I don't even know what that is. Aave, Wi-Fi, Yiffy.
You're in finance. Stands for. They're all, yeah, sure. And yep.
Mana and Matic. Well, I mean, I don't know some of these ones at all. I don't know YFI or Comp. But I mean, I'm not a crypto guy, so.
Those are like decentralized finance-based things. They're investing in different things. There's like subgroups within crypto. It's interesting because they're starting to mimic traditional markets and branch out into different services and functions.
One thing I notice when I look at your portfolio, and I always look out for this when talking to PIs, is the desync issue. Unsurprisingly, for a PI that is very aware of what's going on and watches Felix Valix videos, etc., there's very little desync. There's a little bit in Cardano, actually. But with a crypto-only portfolio, it's impossible to be on top of desync to the nth degree at all times, right?
It's hard because of the volatility. It helps that I do the adjustments frequently, but what you're seeing with the Cardano, why it's so separate, is eToro is phasing out in the US the ability to buy and sell Cardano. So I can't buy Cardano. I think it's a good long-term investment, and I like the project and its methodology, but I can't buy anymore. And eventually I'll have to sell it, whether I want to hold it or not, just because of the platforms, how they're moving forward to decrease regulatory risk. I've tried to do my best to limit desync, but it's challenging with the fees. I learned very quickly. The 1%, now everything, it's a flat 1%, but before there were different fees across the board, ranging from Bitcoin, it was 0.75% to, I think the highest was like 4% for some of the riskier coins. So that made it challenging. One time I did buy or sell everything and then rebuy it to try to sync everything up. But I learned very quickly that that's extremely costly just through doing it, the percentages. And I also learned it causes an issue in terms of taxes, the way the US does taxes. For now, because of the way crypto is sort of poorly classified, it worked out in that it didn't technically count as a sale. But going forward, I think from this year or midway through this year, it will count. So I can't do that ever again, pretty much. I ended up realizing, oh my God, I'm spending so much in fees just to keep things in sync that doesn't make sense. I want to do that because it's good to keep everything as synced up as possible to give the best experience. My sort of middle ground approach, what I plan to do is after we've had a bull run and we're crashing down, I hope to resync everything, do the whole sell everything and buy everything in at the bottom, because then it'll count whatever's left in would count as losses. And so that'll decrease the amount of taxes I and copiers would have to pay. So a lot of what I've actually learned recently has been less my strategy and more how can I minimize the taxes that me and copiers have to pay, because that's a huge area in where you sort of lose most of your money and the fees as well.
How savvy are US copiers? Do they understand all this stuff about desync, or is it all still so new that they're all still learning?
That's a fair question. I tried to go into it in my FAQ. I actually have that as one of my questions. So if someone's really looking into the resources I provided, they can find out. But I don't know if they're super informed. But to be fair, I don't know if in the world in general, everyone's super informed, because the sort of message that eToro, their goal is to provide a sort of hands-off approach to the investor where they can invest in a PI and walk away and trust that their funds are going to be managed well with not no overhead, but less overhead than if they had to do investing themselves, which is tough because then they're not going to potentially notice issues like that. So I think it's probably comparable with the rest of the world, maybe a bit more so because I look at the US as sort of a bit more Wild Westy than the rest of the world for eToro, just because it's less developed, like you said, in terms of it's locked off. You have less competition due to that. Less options. It's definitely on a different playing field for now.
Yeah, I mean, I sort of consider eToro to very much still be evolving itself, even in the rest of the world, where places where it's been going for years. It's still growing and learning as an entity. So in the US, it's still in diapers, as you would say.
Yeah, definitely. There's a lot of information they're learning. And then the US being, I think it's the most, if not the most, one of the most challenging regulatory environments financially. So there's definitely, eToro's having to fight through that. So that's another challenge they're facing in the US, because they have to, one, learn what works in terms of for the copiers to best protect them and the popular investors as well as themselves, everyone in the system, or just normal investors. But they also have to figure out how do we put the things we want to put in to protect everyone while matching US law and being able to offer the features we want to, which is much more challenging.
Okay, now, Tom, one thing I was planning to do was to read a few sections from your pin post, and then you could respond quite briefly to each one. Some of this might sound as if ground that we've just covered because you went into a little bit more detail earlier about your approach.
Sure.
But it does no harm to repeat it, and we might cover some new ground here. So, from your pin post, when everyone invests, their goal is to buy low and sell high. As everyone quickly learns, this is, unfortunately, much harder than it sounds. My strategy sacrifices a small amount of potential gains in order to decrease risk and achieve results without having to time the ups and downs of the market.
As my post says, it definitely is a lot harder than it sounds. I'm sure everyone learns that either in a very painful way or in a less painful, depending on how much money you throw onto the markets. But I do try to decrease the risk via moving between the different assets, which can cost us gains, but it decreases a lot of room for error, because one of the biggest issues with any investment approach is the errors you're going to make just doing your own strategy. Are you going to get nervous and go and make a decision that in the moment seems right, but in the long term, looking back and with your strategy, isn't going to make any sense? So it protects me from that a bit, as well as popular or copiers and anyone else.
Second quote, for the short term, I move funds into cryptocurrencies as they dip from my cash reserves and back into cash as they increase. This allows us to profit from market corrections without having to time them.
And that goes back to where I was mentioning about decreasing some of the gains in order to protect ourselves without doing the timing. One of the biggest mistakes anyone makes is in terms of thinking they can time the market. Maybe you can do it once, but no one can do it consistently, or they'd have infinite money on demand. And they probably wouldn't share that, but I don't think there's any way anyone could do that. And so by us just moving funds back and forth, cash is guaranteed to go down over time because of inflation, but it's relatively stable compared to anything else. And cryptocurrency is more likely to trend up, but it's going to have these massive corrections. So by just moving funds back and forth, we're going to lose out on the top of the market. So you might lose out on 5-10% worth of profits, but without having to do any crazy math or insane guessing, you're going to be able to protect yourself from the 30, 40, 50% drop. So in my mind, it averages out or evens out.
So the second point was for the short term. For my long-term approach, I gradually decrease the amount of money exposed to the market and increase funds held to the side to protect against the end of the bull run crash.
So for the short term, I was talking more about corrections that are maybe a couple weeks to a couple months. For the long term, crypto has previously, or Bitcoin specifically, and since everything follows it, crypto as a whole as well, has had these periods where they've had bear markets for several years. Anywhere between 1 to 3 years, where you were just down. You were trending up, but you weren't back. If you bought in at the top, you were in the red for those years. You were, once we eventually were in the green, you were probably very high in the green, but no one wants to be in the red for years, especially if something happens and you need the money, maybe a medical emergency. So my goal with that is to gradually pull out so you don't get trapped after one of those drops. And hopefully what we can also do is then, once we're towards the bottom of that drop, reinvest and make a profit off of the drop.
Okay, and one interesting thing that you often talk about when discussing your strategy is how you adjust your crypto to cash ratio depending on what risk level is present in the market. Where do you get those risk levels from, and upon what are they based?
Sure. So there is a model that's used with Bitcoin where they've placed a logarithmic growth curve over it, which just sort of tracks exponential growth. Typically things like, for example, the internet or crypto, where they're sort of networking based and they tend to grow as a network, they tend to grow exponentially, so not linearly. So instead of going 1, 2, 3, 4, it goes 1, 5, 10, 50, 100, something like that. That's not the exact math, but you get the picture. And so I have taken one of those models that's just logarithmically tracking the growth at an exponential level, and I've divvied it up into risk levels. And based on the risk level, I will change the amount of cash to crypto I hold, as well as what's my ratio of altcoins to Bitcoin. Because Bitcoin, when we're at the top of the market, you're going to probably make more money holding altcoins because they're going to be in full swing. They're going to be going up like crazy, and they're going to have higher upsides, as we're aware. Whereas when you're at the bottom of the markets, everyone's nervous. Altcoins are dying left and right, so you don't want to be holding them because they could go to zero tomorrow. Whereas Bitcoin is probably going to steadily trudge on, hopefully making moderate gains over time, but it's going to be the safer bet within the environment and the safer play if we want to make profit.
I'm wondering to myself about your competition in the US, the other PIs, the other crypto PIs. I don't know a huge amount about them, but from what little I've seen, some are very much buy and hold. Some invest in very small number of assets, maybe only Bitcoin. There's one guy who's only Bitcoin. There's a couple other only Bitcoin and Ethereum. Strikes me you're very much a sort of licked finger in the air, gauging the wind at all times and tweaking and adjusting quite frequently as required. I mean, you're really quite an active trader, I suppose. You're a crypto trader rather than a buy and hold guy. Are there many people that adopt a similar approach to you?
Not that I'm aware of successfully. I know some people have tried to do trading, but I don't think it's worked out. I would like to say that the charts, and this is sort of where it's a bit, my strategy is a bit weird. I look at what I'm doing as more investing with very small adjustments. For example, you saw it listed as, I think, average of 4 trades a week. I haven't traded in a month, I think, or a couple weeks, because I think we're as close to the bottom as we're going to get. I do the frequent adjustments because if let's say Bitcoin jumps up 20, 30%, I would then take those profits and move them into, let's say, Cardano or Ethereum or other assets that maybe they pulled down instead in that time frame. Because based on how the markets worked, I think they're then more likely to go up because they tend to follow Bitcoin, which gives the impression that I'm a trader. I'm doing a lot of trades, but in reality, I'm just adjusting between the same assets. So it's a little bit of a weird situation in terms of whether I'm an investor or a trader. I look at it as more I'm investing, but I'm doing small adjustments between the assets to try to capitalize on how crazy the volatility is within crypto.
Okay, that's a good way of explaining it.
Yeah.
Okay, let's have a little change of the conversational scenery, shall we? And talk about your copiers. Who should copy Tom Holland?
I would say someone who wants exposure to cryptocurrency, and they want to do a little better than Bitcoin without having to take on way more risk, and also without having to constantly track the markets and see what's going on. Because since things change so fast, it's so easy to, like I said, the drops can happen 30%, 40% a day. And if you, let's say you set a stop copy or a stop loss rather, if you do that and you set it to 20%, you're probably going to lose money just because it'll drop down and a lot of the times it jumps back up. So maybe one of the times you'll get lucky, but most of the time you're going to lose money. You may even buy in after it's went back up and then lose it twice. That happens frequently as well. So by copying me, you sort of avoid all of that. You get to buy the dips and sell the highs sort of gradually, since that's what my approach is mainly based on. And you get to buy crypto without having as much risk.
And who shouldn't copy Tom Holland?
I think this is the pretty standard answer, but anyone who wants profits tomorrow or even a week or a month later, it looks like I trade very frequently, but like I said, they're all small adjustments to try to balance this out, decrease our risk, and save profits or maximize profits. So I'm playing the long game. I'm not planning to cash out everything tomorrow or the next day. I'm not even planning to cash out everything when I think we're at the top of the market. I might take some profits and remove it from eToro, but even then, I'm playing the anywhere from 3 years to 10 years to 20 years game, potentially, or longer.
So people who are in the US who want exposure to crypto but don't really know where to start, and they want somebody who knows what they're doing. And I guess then they would be telling all their friends, oh, I have this crypto guy. He's amazing. And the friend might say, what makes him so special?
I'd appreciate that if anyone wants to tell their friends. I think the things that differentiate me from the other available copy traders is that I'm extremely transparent in terms of what I'm doing. You can go through my strategy, all of the resources I posted, and you can say, what would I do if Bitcoin went to this price? And you can exactly tell what I'll do. So you know what's going to happen. There aren't really any surprises. So I'm also communicating all of anything that happens. So if there is a change, I'm going to make sure you know about it. I'll post and keep that updated. Yeah, so when I was starting out, I was trying to figure out what I should do. I tried my best to look at who were the successful people in the popular investor sphere and what they were doing right and I could potentially do. And I looked at a lot of the resources Jay had posted, since he's done amazing things within the space. And I think he's definitely the benchmark for where everyone should try to be hitting as a popular investor. So I think that's one of the things I'm providing right now. I'm doing my best to match the standard. And if anyone brings forth valid criticism, I do my best to incorporate that and to improve and become a better popular investor.
Yeah, I mean, I've got to say, you do seem to have all bases covered. You know, you really have, as I say, surveyed the scene and thought, right, what should I be doing? Here's a list of all the things I should be doing. And you're doing them all in the most comprehensive way possible. I mean, the fact that every inch of your strategy is out there to be read is incredible. And you're super communicative and you're totally on top of things and you're participating in the eToro world in a way that I don't see any other American PIs doing at the moment. You know, a lot of people know your name. There's Europeans and Brits and Aussies and all, and they all know who you are. Whereas that's not true for many American PIs. But that's all the praise I'll be giving you directly.
I appreciate that.
I need to ask a hard question. Tell me, speaking of other PIs, who do you know best? What other PIs do you know best? Let's say within America, first of all, and then rest of world.
That's definitely a tough question. I don't think eToro's had any meetups for US popular investors yet. And depending on where they were, I might have a tough time going. I don't really, no offense to the program, I don't want to fly out to any other states for a meetup. I might, depends on what's going on. Like if they fold it into another event, maybe the blockchain event that I think just happened, that might be somewhere I'd be willing to knock out time from vacation and go down. But I haven't really had a ton of experience meeting any of the popular investors face to face yet. Hopefully in the future that changes. I do read through all of their posts very frequently just to make sure I'm not missing anything, to see if there's anything I can learn from or see about what's going on so that I can give the best experience possible. I'll regularly look through all the popular investors, which is pretty easy right now. The US, I think, only has 30 popular investors, maybe 10 to 15 that are active. So I can go and once a week or twice a week read through and see, oh, okay, here's what's going on with all the different popular investors. So on a personal level, I haven't met any yet. I hope to in the future, though. In terms of the rest of the world, same sort of situation. I don't know if Andrew, Felix Falix, he counts as a popular investor, but if you count him, I've talked to him a bit within his YouTube comments. I've greatly enjoyed his videos as I've enjoyed yours as well. I'm still trying to convince him to do a review on my account. I haven't gotten him there yet, which is understandable. The US audience is a bit smaller, which is why I appreciate you bringing me on your show as well. But other than that, I haven't had a ton of exposure. I've done a ton of research. So if you count that, then I guess I've researched a lot on Jay and would definitely enjoy talking to him sometime. Based on what I've seen of all of his work and everything, he sounds like a great guy. And when I saw him on the show, I listened to your interview with him. Definitely seemed like someone that'd be fun to talk to.
Yeah, if there's one American PI that stands out to me as somebody who's got a great future, it's Tom Holland. You seem to be trying harder than the rest of them, or at least some of them. It's a similar approach to what I would do. If I was ever going to be a PI, I kind of know now what I would do and what's important. And I wouldn't be one of these laissez-faire types, that never communicates or doesn't explain himself. One thing I would be keen to avoid, and this might apply to you, is to give too much detail and maybe confuse people with technical terms. I do wonder sometimes whether copiers just want the basics. So it's a fine line, I guess, between providing the basics for those who want it, but yet there's also tons of detail for those who want that.
Yeah, I definitely can see that. It's tough because I try to, at least in the resources I provide on eToro, I try to give the summarized version. And then I try to basically give the short, sweet, here's no details, but like an overview version. And then I try to go and in the other section, include all the details. It's just hard sometimes because I don't know how the hell else to put a logarithmic growth curve. There's some terms that are just, someone's going to have to suffer through it if they want to learn about it, which is definitely tough, but it comes with the territory and how technical it is, at least for now. So I definitely will continue to watch out for that, though. I appreciate the advice.
And what else can we discuss about the future of eToro USA? Currently, it's only cryptos, and there are still a number of states where it's not available. I saw a map on eToro, and there were various states: New York, Minnesota, Nevada, Hawaii, or Puerto Rico, places like that. eToro's not yet in there, so they have to overcome all these state-by-state hurdles. It's a massive undertaking trying to get into the US for them, isn't it? I think that's what's taking up everyone's energies in eToro right now.
Yeah, it's definitely challenging because, like I've said, and I'll probably say a million times more, the U.S. regulations for finances are pretty crazy. It's definitely a hard area to break into, and I assume in some ways it's designed intentionally that way to make it harder for new players to come in the space to sort of keep everything stable, which is understandable. It's tough when someone's trying to do something innovative like eToro with the copy trading system and everything else, but hopefully they can figure it out. They did add stocks, but they haven't added it for, like we mentioned before, the popular investors. So hopefully that changes. But I think they're definitely their first goal is just to get it everywhere so they can make it available, which, as you saw with the map, is even taking time. It's definitely a challenge.
Like, do you look at the rest of the world with envy and think if only we could be like that?
Honestly, in the beginning, I didn't, only because I don't want to sound like selfish or hyper competitive or anything, but it's definitely a competitive advantage being in a small pond when you're starting out, not having a ton of choices for people to pick from. And I definitely attribute that to part of my growth, because I'm sure there are plenty of people in the wider eToro sphere, more broadly in the world, let's say outside the US, who are maybe doing everything I'm doing and maybe even more. And they're not getting the same recognition just because there's so many different options to choose from. It's hard to stand out. As I've grown at this point, I would definitely love for it to become more broadly available. I'm figuring some of my following count is probably international, so it'd be great to see them to be able to hop on and copy trade me, and to also get to interact with all of them, get more information. Sometimes people are shy to jump in the comments, especially if they're not copy trading. I've had better luck with people sending me messages when they're already copy trading or they're like on the line about to, because then they have questions and I feel like they feel more willing to take up my time because they're going to put money under investing me, or they already have. So I would love to see more people internationally get involved, because I like to talk and, discuss everything. So I'd love to see that for sure.
I think you may have listened to the Matty Greenspan episode, and he is of the opinion that eToro is just an incredibly good fit with the US on the basis that, in his words, Americans are lazy. What do you make of that?
I definitely think it's a market that eToro wants to get into. I'm not sure about the Americans are lazy approach, but I do think maybe busy is another term. I'm not sure if you're familiar with the labor laws and everything in the US and how vacations work, but
I know you get very little, yeah.
So I would even say busy and burnt out, maybe. That might be better terminology. It's definitely hard to balance everything, especially with, I've seen some of the vacation policies in other parts of the world, and I'll be honest, I'm very jealous. So that might be part of the problem too. It's hard to find time to do all these different things when you're, I guess, limited to the very small amount of time off. Whereas if you're in another part of the world, you may have more time to go and explore different things, do research on the markets. So it definitely adds a layer of challenge to it.
So many Americans are pining for more holiday time on an annual basis. And I don't know if the listener picked it up, but they may have heard some pining in the background there. That was your dog that obviously misses you terribly.
Yes, she followed me all the way to Copytraders Club. She's right outside the doors. She's trying to break in.
I'm sure some of the staff are keeping her occupied with a juicy bone or something.
God bless them. I don't know. It's hard to keep her occupied.
Okay, final question then, Tom. What question do you wish I would have asked you during this chat?
The only question I can think of is what made me start investing, like the steps that led to me actually falling down the rabbit hole and becoming involved.
Okay, that's a question that I hear all the time on investing podcasts, YouTube channels. It's kind of one of the stock questions, and obviously, I like to go a little bit deeper, Tom.
Sure.
But anyway, this is your question, so go for it. What's the answer?
So yeah, definitely agree it's a stock question. A lot of people might answer it with learning about what inflation was. I'm not sure if that's what everyone goes with, but that definitely was more of what kicked me off, and then learning how and I don't want to say easy it is to beat markets, but how high the odds are that if you just invest in an index and do nothing else, you are to match or beat the markets in terms of keeping up with inflation. So that was a big push for me to learn more, because I was like, wow, I'm losing, like this last past year, I think it was over 7% inflation, which is insane, historically high levels. So I jumped in a bit before that, but it was definitely a big learning curve for me, learning how big of an extra tax it is on someone's wealth.
Well, fantastic. As we can hear in the background, increasingly, you have to get back to your dog. What's your dog's name?
Her name's Mocha. She's got the coloring of the coffee, where she's got some tan, like brownish color, which we thought of as caramel. She's got some blackish brown color and then some white. So we went with the coffee. My girlfriend also likes coffee. I don't drink coffee, but it fits. So we went with that.
And what breed is your dog?
She's a half Australian cow dog and then half several other breeds, such as husky. I like to think that all of the very small amount of husky she is went directly to her vocal cords, because she does all of the weird husky sounds. But I'm not entirely sure. Maybe some of the other combinations of breeds led to her unique vocal cords.
Well, I think it's time to let her run free in the forests of New Jersey.
Yeah, I'm in trouble. We'll see. I don't know. I thank your staff for holding her off, but we'll have to see what happens when I walk out those doors.
We're getting confused about our geographic location here. Let's wrap it up. Tom, thank you very much for being with us here today.
Thank you for having me.
And the very best of luck in the future.
To you as well.
Tom Holland there. It strikes me that this was not the most challenging of chats. I put that down to 1, because he's doing so much right in terms of the PI job, and 2, he's crypto only, so there is a limit to what I can press him upon. Very interesting to get to know him, and if the eToro USA tide continues to rise, it wouldn't surprise me at all if the good ship Holland 3510 is at the front of the fleet. That's all from me. See you on Discord and Facebook. Until next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything in this podcast is for entertainment only, not financial advice. Do your own research. This is just generic chit chat. We don't know your individual circumstances, etc., and so forth.